Okay, tonight we're just going to kind of look at kind of request that, and I keep forgetting that that is a relevant factor when we're doing our trend analysis. No sound. No sound. All right. Have sound. Frank, do you have, well, Frank won't know whether he has, all right. No? Okay. Yep. Hopefully they would read the instructions from Jim. There's an eclipse. Now it's going to be dark then. Okay. So when we look at any time I look at a trade, we're first looking at what our overall trend is, which is what are the signals doing? Are there patterns? Where are the stochastics? Are there other trend lines, trend channels, and the moving averages? Try to turn up his speakers. All right. Okay. So here are the moving averages that I use. The 200 simple, the 50, the 34, exponential, 8, which is our T line, and 3 is our 3T line. To make our decisions, moving averages are what everybody else has on their charts and what they watch. So our charts have the blue line, the 50-day moving average, the red line, the 200-day moving average. Oops, we've changed from the 20 back to the 34. And the T line is the 8 exponential moving average. They work very effectively to tell us whether we're in a downtrend. Oops, there it is again. When we're using, why is the exponential for the 8? Because it just works. So the answer to that is put it on your chart. Because for some reason it works like a natural. Here it is. It's like has Fibonacci characteristics, the natural support and resistance level of human nature. And there's a simple T-line rule that if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. Conversely, if you see candlestick sell signals and close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. What works very effectively is as long as you're above the T-line, the probabilities are extremely strong that you're in an uptrend. As soon as you close below the T-line, so when you T-line, it's the 8 exponential moving average, yes. As soon as you close below the T-line, the probability factor goes tremendously in the other direction that you're probably in a downtrend until you see it come back up above the T-line. Now with that, there's some truisms. Because it acts like a natural support and resistance level of human nature, the further away you move from the T-line, the higher the probability it's going to come back and test. Now, that alone works extremely well. But what we're using candlesticks for is to see what everybody else is doing. A lot of people ask me, well, don't you take fundamentals into consideration when you look at your chart? And the answer is no, because we're not trying to analyze fundamentals of companies, or we don't need to, because essentially what we're doing is we're analyzing the chart that tells us that those signals are the accumulative knowledge of everybody else buying and selling during that specific time frame, and they're making their decisions for whatever reasons, technical, fundamental. We don't need to know what all we need to know is what does everybody think about the fundamentals of that company. So the 50-day moving average is a very visible support and resistance level. The advantage we have with candlesticks is if we can see a sell signal and I take it back down to the 50, we can assume, and again, through the 50 and the T-line, we can assume we're in a downtrend. It just gives us much more clarity of what decisions are being made at those moving averages. Conversely, if every time they hit the 50 and they trade it up, pull back, hit the 50, trade up, we can assume that every time they hit the 50, a support level. So there's nothing difficult about this. What we have as far as our visual advantage is when we come back to this level, we can see what type of signals occur down here to tell us they are buying. Gives us a little bit of a head start above everybody else. So moving averages have truisms. If a moving average support is breached, they'll come back up and test it to see if it's going to act as resistance. If a moving average has been acting as resistance and they go through it, they'll come back and test it to see if it's going to act as support. So anytime I see they've come up through a moving average and they come back and test it, and we can see there's buy signals at that level, we can assume they're going to the next target. When they get to the next target, the 200, we can see this was a shooting star signal. When they opened it lower the next day and started trading lower, what did it tell us about the force going up through the 200? It wasn't there. They're taking profit. They come up through the 200. What do? They come back and test it to see if it's going to act as support. We can identify that immediately by a little bullish harami right here at the T-line and the 200 and starting to trade positive. Gives us that much more confidence that that's where the bulls are stepping back in. And we're going to be able to see that much earlier than most other technical charting techniques. We can also use the moving averages to add to the credibility of a breakout. If we can see a Frypan bottom, and then they open positive and continued positive, breaking out of our Frypan bottom, but what were most other people looking at? They were looking to see what happens when it gets to the 200-day moving average. The most important 10 seconds it's out on Webinato. Sandman, you might want to log off and log back on, see if you get a better connection. Same scenario. When they come up and they fail at the 50, come up, fail at the 50, assume that they're not going through, look more for the downside. Anytime you can see a trend, and they bring it back up to an obvious resistance level, what type of signals are we looking for? Well, had this closed up here, doing another big green candle, what did it tell us about the resistance level? It probably wasn't acting as resistance. The fact that they did a shooting star, one of our 12 major signals, and then opened lower the next day, they were resisting at the 200, this downtrend, at the 50, this downtrend is still likely in progress. Now, moving averages act like magnets, and this is very important for the relevancy of the T-line. Moving averages act like magnets because if somebody's ready to buy and they see it drifting lower, where they think it's going to be the best, if it supports at the 50. How do we know whether it supports at the 50? Because we can see a morning star signal, we can see the buy signals, and a close back up above the T-line. We can be buying in here with much more confidence, expecting wave 3 now in progress. Why? Because again, if you're an institutional tradings of the management of your hedge fund, mutual fund, your Goldman Sachs, whoever, and say, we probably want to be picking up whatever this is. And they say, all right, go ahead, pick up 2 million shares of it. Well, if you're a trader, analyst, where do you think you're going to wait for it to see if that major moving average is going to act as support? So if everybody's waiting to see if the moving average is going to act as support, what happens to this trend? There's usually not a lot of buying until everybody waits to see if it's going to act as support. So anytime we fall through a moving average, they come up and test it to see if it's now going to act as resistance. We can see immediately there's sell signals, goes a downtrend. We see buy signals. Where's the next target? Back up to the moving average that everybody is watching. And what type of signal? A Doji, which tells us they're not buying. Get ready to go short again. Aisha, I don't know what that means. That support? All right, so this is the advantage we have of when we can recognize it's hit a resistance level, a major moving average, and it closes below the T-line, and the next day we're getting ready to go short, but it doesn't do very much. Well, what type of pattern do we have or signal can we recognize? The Doji rule. If it opens lower, which way is it going? Going down further. T-line's not acting as resistance. After we've failed up here, the probabilities are it's heading down. So this is the advantage we have, being able to see what type of signals are occurring at levels that everybody else is watching. I always get the rhetorical question, not rhetorical, we use that word too often. I always get the question of, why don't you use the 50 exponential? Isn't that more accurate? We're not using the 50 and the 200 to make our decisions. We're using those moving averages because everybody else uses them. We want to see what their decisions are at that level. That might be true, yeah. Sandman, if you're trying to get in off a cell phone or something, you might not get clear connection. So this is what improves the probabilities of being in the right place at the right time. This is kind of your Mcmuffin, a morning star signal right off your 50-day moving average, stochastics coming back up, then kind of a double Doji sandwich, or your Mcmuffin, gives you a much higher probability they're going to be heading in the right direction. Now we did this one. Fails, comes up, goes through, and then we see exactly whether that is going to be acting as resistance or support once they go through. Okay, so this is the observe the obvious. We know what type of signal this is, a big morning star signal. But where is it occurring? Look at your Doji that just touches the 200-day moving average in the oversold area. This is what has made me a ton of money. It's just the Doji rule. If it opens positive and starts trading positive, what did the Doji tell us that when it hit the 200? That's where people were stepping in to buy. The next day they confirmed it. What was our additional confirmation? Remember what a morning star signal is. It needs to close more than halfway up this candle. The further up that candle, the more powerful the reversal is. And what's your addition? The fact that they've closed back up above the T-line. So this isn't rocket science. If we know what the simple results are or expected results are of human nature by recognizing the signal and then adding where it was happening and what confirming indicators were confirming, we just dramatically improve the probabilities of being in the right trades at the right time. If I'm trading downtrend and they come up and they fail right at the 50-day moving average, what can I assume? The downtrend is still in progress. Anytime you bounce up, no matter on what time frame, you can see what type of signal is occurring at what level everybody else is watching. Would you wait until it got above the 50 on this chart on the Dow? Oh, no, remember, we're not buying the 50. We're buying the signal. Everything else is just something that we watch. Now, if it hit and then did a little shooting star, and then the next day it traded lower, failing at the 50, yeah, that told me something. But I would be buying here because where do you think our first target is? Back up to the T-line. And what was giving us confidence that it might get there within the next day or two, or even that day? The fact that we to 200. Could you kindly comment on the rounded bottom signal? Yes, we'll get to that, which we call a Frypan bottom. All right, so no matter what time frame, the moving averages work as as expected support and resistance levels. Now, that is different. Now, I don't have a chart. That is different than the T-line, because when it comes down through or up to through a moving average or the T-line, or comes up through the T-line, remember, nobody has the T-line on their chart. That's why it works very effectively for us, because we can see where the natural support and resistance level of human nature is, and then what type of signals occur when it gets. Cheryl, did we not go through this? Who is your web, or who is your server? Safari. I've never heard of that. But we know that and a few others do excessive blocking of emails going out. Okay, Yahoo. Yes, we've already discussed this. Yahoo is the one that is blocking the emails. So, or if you're having problems getting stuff on Yahoo, if you've got another server, send that address to Abraham and he'll change your email address. So it's not coming from our mail out service. It's coming from Yahoo, AOL. I forgot what the other one was. They have excessive blocking going on. Okay, so observe the obvious. An evening star signal right here at the 200-day move. So be doing that. So I don't know whether from your server that you can go back to them and request emails coming from a specific address to be let through or not. You might try that. But again, observe the obvious. Where did this evening star signal occur? Right at a level that everybody else was watching. American Airlines. Look where the failure was. Right at the 200, gap down. Gap down through the 50 and the T-line. That's a pretty good obvious reversal. Simply 50-day is the institutional support and resistance. Line 8 or T-line is what you are referring to as the human nature. Yes. The 50-day moving average and the 200-day moving average are the moving averages that most institutions, I say most, all institutions use to make their decisions about their portfolios. Now they're using it because everybody else is using it, so it's kind of a herd situation. The T-line, the black line, nobody has, statistically, nobody has it on their charts. So when you see a close below the T-line, or if you see it supporting or resisting at the T-line, that's the natural human nature support and resistance level. What year are these charts from? Oh, I don't know. These are just examples. They could be from any year, but it doesn't really matter. They all look exactly the same. That's where you can obviously see the Dow is supporting at the 50 and gapped up through the T-line. Or if you saw a bullish harami right at the 50. Anytime you see the level that everybody else is watching, we've got that much more clarity of what's happening as far as investor sentiment. We can also use it to our advantage in the J-hook pattern becomes more compelling. But you got the Bobble breakout because everybody's watching to see what's happening here. We're waiting to see if it comes up through this level, giving us our J-hook pattern or our Bobble pattern. So that Bobble breakout is very compelling because if we can see the acts like a natural support and resistance level, when it goes through, we know we've got a J-hook pattern that if you took out the 50, you'd have a J-hook pattern. Yeah, it doesn't matter because I'm going to go to live charts, which we're going to see exactly the same looking charts. I don't know how far back these are. They're just good examples of where the 50 and the patterns work effectively. If I see a Frypan bottom and it breaks out through the 50, not only do we have a breakout of the pattern, but it's breaking out at a level that everybody else is going to start jumping in because they can see that it broke through the 50. Whoops, I guess that was it. So basically, whenever we can use the moving averages and see what type of signals or patterns are going through it, greatly improves our probabilities that we're going to be in the right place at the right time. And it's all because of one factor. Human emotions work the same way time after time. Yes, it is fractal. They work on all time frames. This chart could be a 10-minute chart. It could be a 5-minute chart. It could be a monthly chart. It's going to look the same. Okay, so if we take that information and apply it to any chart we're looking at, very convincing buy going on in Amazon. Right here, left-right combo or a Morningstar signal. Off the 200, closed at the 50, and then went through. That pretty much told us that this was a support area with buy signals. Whereas now what's your J-hook pattern, and look where the breakout level is. Here, that tells us it's probably more upside. Apple. Notice how when they came up through the 50, came right back to the 50, came right back to the 50, and you can see the pattern setting up. So what was everybody and their brother watching? Watching to see what it does. Once we can see immediately there was buying. ON. Look at your Morningstar signal. Right at the 50-day moving average. That puts you in a position where the probabilities were pretty strong you were moving in this direction. Now, back to the T-line. Notice your J-hook pattern. Why we recommend did we do it today? Because look where it pulled back to. Right smack dab to the T-line. And again, why is that relevant? Because nobody has the T-line on their chart. So every time we see the magnitude of times that the T-line acts as support and resistance, you pretty much have to assume that it is a natural support and resistance level of human nature. Is that gap up Doji on a warning? No. What are we looking at? Wave 1, wave 2, wave 3. On these, I probably would say set a safety stop right about there. Because if it came back down through there, what's it telling you? They're not breaking out. But I would suspect wave 1, wave 2, wave 3 is in progress. Apple, kind of the same thing, down through that level. But what's our assumption based upon knowing what patterns are setting up? Wave 1, wave 2, bouncing right off the 50, wave 3, and where did this close today? I think at an all-time high. Now, I was going to use this as an illustration to say the reason I don't advocate long-term holds as much anymore is because of all the things, the news that is instantaneous to everybody around the world because of the internet, and the technology improvements. So what caused the move in Apple? Because they announced that their electric car is probably going to be on the market in 2025. That has a lot of residue effect elsewhere. Something that might have looked like a good long-term hold or even a good trade, fuel cell was affected by probably that announcement. Oh, Peter, all right. And I better watch out what else I say here. But why was fuel cell affected? Have no idea. All we can see is that it was affected. Lucid might be affected. However, what was the one element that we know the probabilities continue the uptrend? They couldn't close it below the T line. What do we need to see tomorrow if we're long Lucid? You better open positive and trade positive. I don't know why it would affect Blink. Blink may have just been mere profit taking after the bottom breakout. In Apple, the open interest was outrageous at 155. The option volume, any of this is on Apple, you're going to be able to get in and out of easily. Pull it up here. See, now you have to kind of dissect this. See how they opened here and closed here. Then they opened it before. But then this morning they were trading it back off. So you had a dark candle, then they gapped it up right about where they opened it and had another dark candle. That's your two dark crows. That's a sell signal. However, obviously it didn't close there. When it closed back up here, what's our new assessment? Looks like the T-line still acting as support and progress. Yeah, so that's another thing that, Bill, you always have to kind of keep in mind is that even though you might be looking at a sector or an industry that's just growing rapidly and has great new technology, you got to be outdo the last technology. So that's exactly what happened today when Apple announced that their car would be on the road in 2025. That put another competitor in that industry that might be technologically ahead of everybody else. So that's why you always have to let the charts tell you what everybody thinks about what's happening in that stock or that sector. So when I see something like this, and we know there's obviously some decision making going on at the 50, but we have a little bit better view of what's happening because of the Doji. The Doji rule says if they open this lower and start trading lower tomorrow, what's it telling us about the 50? It's still acting as resistance. If they open this, we might have a double Doji sandwich. The 50 is not acting as resistance anymore. Now, that becomes a very powerful trade because if they open up positive and start trading positive, what do you think everybody is watching at this level? They're watching to see if they can take it up or they're going to fall back. If they start taking it up and you start buying in here, everybody else starts jumping in, and that's what creates that doji sandwich. How many days moving average between 8? Is this a trick question, DS? RK, yeah, they may have announced it many times. Every time they announce it, it reminds people that may have not have seen the last announcement that there's something different. Now there's people changing their minds or making different decisions about portfolio positions. So it's not the number of times somebody announces something, it's the fresh announcement that attracts people that might not have been aware of the previous announcements. Okay, I'm going back. How many days moving average between? Oh, between, meaning this gray, that's the 34 exponential. Is that what you're asking? All right. Yeah, so there's the 34. Now, I'll jump here real quick. A lot of people say, why do you have the 34 on there? Because it works reasonably well. You can see where the Dow supported today, right smack dab at the 34. So here's a very the most important factor on a candlestick chart is the candlestick signals. Then everything else is a confirming indicator. 50 to 200, we can see what everybody's doing. The T-line works real effectively. The 34 works relatively well. When I say relatively well, well enough to have it on your chart. But if somebody says, put the XYZ indicator on your chart, you can put it on. If it doesn't enhance your ability to see what's happening at reversal levels, take it back off. My charts, as you can see, I hope, is not very complicated or very boggled up. My late friend Dave Elliott had so many moving averages on his chart. Doji sandwiches, stick sandwiches, Mcmuffins, nothing like that. And the worst case scenario, Eric, is put both of them on. It's not going to clutter up your chart. And after a while, see which one is worth keeping or which one, maybe they're both worth keeping. So the 34 has effective use. You can see how Tesla pulled back, did a doji right on the 34. Omar came up, did a doji at the 34. MGI did a shooting star, failing at the 34. So if something works, keep it there. If it doesn't work, take it back off. You can see this one. Yesterday hit the 34 twice, 2 days. Came back up. Where do you think the next likely target is? The Stochastics coming up. I'd look for it to come back up to the top of the channel. But that seems to work. John, did I see somebody say that he didn't actually sell his stock? All right. Okay, so the 34 works well. But notice where you can go short. Notice our evening star signal, our hanging man, failing at the 50. Close back below the T-line. No, that's not really a flutter kicker. That's Doji. Spinning top Doji. Here's another example. That's why we were recommending Kirk a while back. Because there's your Bobble breakout right here at the 200 with kind of a Doji sandwich. And I'm trying to find some of the other ones that we were recommending because they were doing stuff right at the moving average. There's your best friend signal that came up through the T-line and the 50. Just improves the probabilities that it's not going to act as resistance. Same scenario right here. Took you right down to the 200 in the oversold area. Doji, spinning top, bullish engulfing, close above the T-line. It was pretty obvious the 50 was acting as a support level. Oh, not necessarily. Well, it could. But right now, there's nothing to tell you there's any buying here. Now, if I was short, what's our logical spot to put a safety stop? At today's high. It shouldn't come back up through there. Yeah, you've gone pretty far away from the T-line. All right. Yeah, that's the problem, though, MC, is at some point, stocks get to the point where they've reached their value. Now, Musk obviously has enough ideas that he keeps creating incentives to buy the stock. But years ago, I had people when I was in Houston, they had Walmart. And Walmart had just gone gangbusters for years. But it finally got to a level where it was finally leveled out and didn't have much more upside. But you couldn't get that stock out of their portfolio with a jackhammer because they made so much money with it they didn't want to sell it. And that's not the way to invest. The way to invest is you own something until it's gotten to the level where you should be taking profits and then move on to something else. On Kirk, how do you know it's going to officially bounce off the red moving average? You don't. It didn't actually touch it today. On this one, when we were buying it, it kind of had an indecisive day. So if it opened positive, what was it telling us? They were going to trade it positive. So that's kind of your Doji sandwich Bobble breakout. There you go. Okay. Uh-oh, what happened here? All right. Okay, so anytime we can use the moving averages to our advantage. So when we see buy signals and it's closing up above a major moving average, that just gives us added probabilities that there's been a change of investor sentiment. An RFP. You can see the reversal. Now we're right here at the 50 and the 200. The Candlesticks just coming up. Buy signal, but now we want confirmation that they're going to get up through those moving averages. And the same scenario on the downside. If they're selling off and they can't hold a support level, that's pretty good evidence there's probably more downside. So when we're looking at a signal like this, we're looking to see what happens at the moving averages. If they can't get back up through the moving averages, that's a good confirmation our downtrend is still in progress. Bearish best friend couldn't hold the 50, but it held the 200. However, today it traded just below the 200. So what's our strategy at this point? Well, if we're thinking of going short, if it opens lower, you can start shorting, because what do you have then? Your bearish best friend followed by a bearish doji sandwich that didn't support at the moving averages. Darren, no. Rick is a good friend of mine. As a matter of fact, Rick was the moderator for our chat room for a couple years. That's where he got his information on candlesticks, and he was the one that actually pointed out the T-line. So, do you make most of your buying decisions around the moving averages? No, they just add confirmation that that's where everybody else is buying or selling. Bidu, big bearish engulfing, closed below the T-line. I'm sorry, the 50 and the T-line. That tells you there's no support there. Another one you could be shorting on weakness tomorrow. All right, so let's jump over to some of the ones that might be looking pretty good. Here's one that's, look how this one bounced with a Morningstar signal right off the 50. Now it's going into a J-hook pattern. And why do we know it's a J-hook pattern? Obviously, we can see the trajectory and what happened once it got back to the T-line. Indecision, indecision, indecision. High probability we're heading for wave 3. Yeah, hold on to the individual ones. I will look at the SPY again. It doesn't matter, Lenny. Right now, the 30-minute chart doesn't mean a hill of beans. Because what is this a depiction of? This is a depiction of what was investor sentiment right at this time, which might not have anything to do with what investor sentiment is as soon as the day ends. Remember what's happening to investor sentiment. It's not being expressed until, how many hours later? 14 hours later, until the market opens up tomorrow. So anything you see on a chart on the close today means nothing because investor sentiment could be completely different by the time it opens tomorrow. I'm trying to understand the third bar and why it moved up. Yeah, I'm trying to understand the third bar. This one, the third bar. On the 30-minute, yes, we're on the 30-minute. Which one? One at 11 a.m. Okay. So what is the, trying to understand the third bar and why it moved up. 3 more to the left. 1, 2, 3. This one right here. You're trying to understand where is support. That doesn't necessarily mean there has to be support somewhere. I just told you that was where buying started. It doesn't have to, it doesn't, we're not saying that reversals occur at moving averages. We get much better view of reversals if they're occurring at a moving average. Is that considered scissors? Scissors? That's a bullish harami. I've never heard of scissors. Okay. Tweezer bottom. That one wasn't a tweezer bottom. All right, so look at your Pixelworks. There's your classic Frypan bottom followed by a J-hook pattern. So you keep an eye on that one. Look at your Bobble breakout on DBI. This is where you want to kind of concentrate your mental or visual targeting of maybe picking out 4 or 5 different patterns and learn them extremely well. I will buy a Bobble pattern as soon as I see it because the probabilities are that not only is this a J-hook pattern, but a J-hook pattern where everybody is witnessing where it's gone through a resistance level. They produce extremely high probability trade results. So if you can keep all your trading to very high probability trade results and learn why they're doing it and what confirms them and what to do when you're in them, if you become an expert, now you're in a position where you're not having to listen to everybody else. You're not having to acquiesce to your emotions or your fears. You just do what the chart is telling you to do. A Bobble breakout is, which one did we just do? A Bobble breakout is a J-hook pattern. Look how when they hit the 200, they started selling. And where did they sell to? Right back to the T-line. What happened here? It started back up. It was giving you a J-hook pattern. So if you took the 200 out, you essentially have a J-hook pattern. But what is more defining is the fact that you can see exactly where they were selling, and everybody else could see where selling was occurring, and you can see when it broke through that level. We could see it, and we could be buying right here. Everybody else starts seeing that it came back up through, let's start buying again. So it's a J-hook pattern with much more definable sell area and buy area. Anytime I see a best friend signal, notice it gapped up through the 50, the T line, and closed right on the 200. If this opens positive, there's a high probability the next wave is in progress. So the T-line crunch is a type of bobble somewhat. Usually a T-line crunch is more just kind of a steady move up to the breakout area. There you go, Jay. The T-line is working effectively as a support level. Telling you the J-hook pattern is setting up. So once you become convinced that the T-line is going to produce extremely high results. Now, why did that one? It becomes much more, you can become much more aggressive as far as buying at the appropriate time. Knowing, again, that simple rule that as long as you're above the T-line, the prospects are pretty strong you're in an upjet. Yeah, this chart is 3 hours old, 4 hours, 5 hours old. Morning star signal, J-hook pattern. What else do we have? Bounce right off the 34. So the more you can put into your visual analysis, to say, oh, there's my bobble, kind of my bobble web, bobble breakout. Where do you think your next likely target's going to be? Up here. I've gone through that target. Is a bobble breakout a J-hook at a major moving average, or is every J-hook pattern a bobble breakout? No. A J-hook pattern can occur anywhere. Doesn't have to hit a support level. It just has to do a J-hook. A bobble breakout at a major moving average and then coming back up through that resistance level. Well, Robert, I've got 3 cuckoo clocks in here, of which about 2 days after I set them all to cuckoo at the same time, they all cuckoo whenever they want to. I've got about 4 Ithaca calendar clocks that chime, and after about 2 days they all chime at different times. So. Let's see. Nordstrom's. This is a bobble breakout. Failed, pulled right back to the T-line, and then came back up. There's your J-hook pattern, but more defined because it did it right here at the moving average. However, notice that it opened here and closed here. So I wouldn't be buying this one until it comes back up through this level, through the open. OZON. There's your best friend signal. Gap up, closed right here. Stochastic still coming up. So what do we want to see? We want to see it open positive and trade positive. Now we know we have got a good entry point. And what do we want to see from there? Definitely do not want to see it close back below the 50. So we know when to be buying and where we should be at back out of that trade. Let's see, we did DBI, I think. Yeah, there's a bobble breakout. You can see where it failed. You can see the bullish harami right smack dab on the T-line, then sandwich. So where could you have been buying this one? Right here. Because if they opened positive, what did we have right here? A Doji sandwich. If it opened positive, what did it tell us about the 200? Wasn't acting as resistance. If it opened positive, what did it tell us about our pattern, a Bobble breakout? And Zum, observe the obvious. Right smack dab on the T-line and bouncing back up. Now, why is that beneficial to us? Because we can see with the added confidence that they came right back to the T-line, this natural support level that nobody else has on their charts. All right, so the moving averages allow us not only to decide when to get into a trade, but where our next likely targets might be. Why? Because that's what everybody else is watching. So on Bloom, with the best friend gap down, now a bearish doji sandwich, if this starts trading lower, you can be still shorting it with the idea they're coming down here. And then if they break through there, where are they going? They're coming down to fill the gap. Whoops, I've kept us way over time. The T-line, lower trading tomorrow. Laser, where did this fail? Well, couldn't get up through the 200. Try it again. Bearish Harami, hanging man, opens lower. Once again, failed at the 200. Which direction do you think this one's heading? After they failed up there. Is there a critical difference between the 8 EMA or the 9 EMA? Is the 8 EMA T-line really that critical, a statistical marker? Lenny, 20 years now. So if you want, put both of them on, or put the 9 on there and see how well it works for you. We're not trying to fool anybody with the T-line. We're just showing you that's a high probability situation. It just seems to work well, and seems to work so well that you'll see numerous times where they pull back right to the T-line. So put the 9 on there and see how many times they come right back to the 9. Yeah, it's been used for quite a few years. All right, let me see what else we got here. Yeah, so I tell people, don't take my word for whatever you want on your chart. I'm just trying to give you a format that tells you here's a good starting point to show you where the probabilities are going to be greatly in your favor. Volume I don't care about. First of all, this is Billy gapping down. My universe is already stocks that are trading greater than 200,000 shares a day on average. I want to be trying to get in and out of a position and having to sit there for 5, 10, 15, 20, 30 minutes to close it out. I want to get ready. If I'm ready to close out a position or I'm ready to buy a position, bam, I want to get into it. Now, the only time volume becomes part of the analysis is, I don't have volume on these charts, but let's say, for example, on this dark cloud right here, all of a sudden we had a big volume spike. You know, that'd be a little bit more added fluff, but that's where the smart money was starting to sell. So this is ACB. You can see that it closed right on the 50. What's that tell us? If they open below there, that sell is still in progress. Yeah, the Japanese race traders used one simple process, and that was the signals. And I always remind people, the Japanese become wealthy trading using the candlestick signals. They became legendarily wealthy. There were songs in Japan that, if I couldn't be, I think it was the Huma family, or the Huma family, at least I'd like to be a lord. No, when I say it seems to work extremely well, it's because I don't want to. I can say it works extremely well, but I always tell people, don't take my word for it. Don't take anybody's word for anything. Put stuff on your chart and then see if it works as they say. Another one, TLRY, failed at the 50. Might have a lot more downside. And CLOV, that's a bearish flutter kicker signal. Was somebody asking about that earlier? Like how you had a green down below the previous day's open and did a doji. And what's our doji rule? It's going to move in the direction of how they open after a doji. So when they started trading this lower, you could be shorting immediately because it's going to trade lower. And why do we call it a bearish flutter kicker signal? Because if you took out this little flutter, you've got a bearish kicker signal, which is one of your strongest signals. So here's another one, NCTY. Right there, you wouldn't know what to do. Might be an uptrend if they open it positive and trade positive. The fact that they open it lower, confirming the bearish engulfing signal, and opening at the T-line and heading lower and closing below the 50, tells you there might be some more slingshot effect to the downside. So it's very simple. So there's really only two rules that can dramatically improve your profitability and your trend analysis. Which would be, if this opened positive tomorrow, it's probably telling us there's supporting in here. If this opens lower tomorrow, telling you got a bearish doji sandwich, they're still taking it down. And then if they can't get back up above the T-line, the other rule that you want to remember is the T-line rule. As long as you're above the T-line, you're in an uptrend until you move too far away. As soon as you close below the T-line, you're in a downtrend. But what is the most important factor when you analyze any of your charts? Then everything else a confirming indicator. All right, so are there any general questions on candlestick analysis? Whoops, I didn't scroll down. That's why I didn't. Bill, that's funny. If they all use the signals, they didn't. Just that family did. They were a rice trading I guess, enlarge its family. So, and even to this day, there's an old saying that if everybody's using something, it doesn't work anymore. So everybody's always say, well, if everybody learns candlesticks, they won't work anymore. I can pretty much guarantee you 1/10 of 1/10 of 1/10 of 1% of all the people in the world use candlestick signals. So we could train another 100,000 people how to use candlestick signals, and it still wouldn't make a wrinkle in any of the markets. Let's see. Actually, could be kind of a bearish scoop pattern, yes, with a slingshot effect to the downside. Who did the race traders trade against? Well, the race traders, the Japanese rice candlestick traders, traded for their own accounts, and like anything, reasons. So not every rice trader back in the 1700s for using candlestick analysis. With the NASDAQ and S&P at all-time highs and the Dow and the Russell trading lower, no, it just means the overall market trend hasn't changed. It's just that specific sectors are rotating. Oh, yeah, I used to use the 20 EMA, but it's less effective unless you're in a very strong, steady trend. Okay, I'm still scrolling down here. If one understands your 12 candlestick signals, there would be good form day and yes, let's see. If one understands your 12 major signals, that would be good for day trading and swing trading or options trading. Yes, it's all based, it doesn't matter whether you're what time frame. Candlestick signals work on all time frames. Yeah, so if you're trading corn, who's trading against the traders? Well, all the traders are trading on different reasons. All right. Jay, you see me in a karate outfit would be like watching a big fluffy cloud. Julia, good, because that's the one thing that I've learned through the years, that you don't listen to anybody else. As a matter of fact, you don't even listen to me. If you learn the signals and patterns and learn how to identify what they're doing and the reason behind it, then you don't have to listen to anybody else. Emotions were killing me. That's Julia, that's why I became such a good candlestick investor, is I could see when everybody was panic selling at the bottom, which was usually me. I could see when everybody was exuberantly buying at the top, which was usually me. So I got tired of asking myself rhetorically, how come whenever I sell, the thing turns right around and heads back up? Or every time I buy, immediately turns around and says, I was the normal investor, buying at the wrong time and selling at the wrong time. So a very logical trading strategy at that point was I just needed to see when the buying started in the oversold area instead of selling and getting ready to take profits in the overbought area when everybody else was buying. Okay, what time frame of chart like 1, 2, 5, 3 minutes or day turns should one look for trade? That's up to each individual, DS. I trade the dollar crude oil off the 10-minute chart when I'm trading during the day. Now, it all also boils down to how much time do you want to put in and how fast you want to trade. I used to trade the E-minis off a 1 minute, 3 minute, 10-minute chart when I was much younger. If I'm trading, don't want to have to sit and watch the trades all day long, I might be putting on trades based upon a 5-minute, 15-minute, hourly chart if I'm buying the dollar. So since they all work, you want to figure out what time frame works the best for you. Okay, I guess, Jim, go ahead and do the double line. Oh, Jim. And in 3.7 seconds, do the next double line. XLF, stay short. Now again, anytime you see things starting to close below the T line, the probabilities are you're heading in a downward direction. XLK, you stay long. Micron, notice how it's using the T line as a support level. Freeport, that one, I probably wouldn't be long or short right now. Notice how it bounced up off the 34. You're probably in an uptrend. I'd probably be someplace else. Myrna, you can get rid of the 200 because they'll probably come up and fill the gap and maybe come up all the way up here to fill the gap. And Crocs, ugh. I would probably, if this trades flat tomorrow, close it out because at this point you don't know whether it's going this way. And then I would can always buy it back if it comes up through this level, telling me my bullish J-hook pattern is working. What happened there? Ugh. Billy, stay short. Oh, I don't know where the target would be. Bearish best friend down. That usually means they're trying to get out of this with great enthusiasm. Stay long. I would just use the T-line as your stop on Unity. Doji, I wouldn't be long or short. Not until you see a signal one way or the other. QuantumScape is a toughie. Now it came right down to the 200. Notice it came up through the 200, came right back. It better be trading positive from here, telling you they're starting the next uptrend. You definitely there's your J-hook type pattern. I wouldn't be a buyer here. Oh, sell. I would stay long until you see a sell signal. Johnson, Masco getting a little bit toppy. I would stay long and also use the T-line as the stop. F5, just stay long. However, you're in the overbought area. Put a safety stop right there at today's low. To bring it back down through that level, you definitely want to be out of that trade. Is that Visa symbol? No. Visa, stay short. MasterCard, you can short this one. Tap, tap, tap. You're looking for Apple. I would stay long. Click. That's an ugly chart. Now you did close above the T-line. So if you're long, it has to open positive and continue positive tomorrow. Ford, getting a little bit toppy. If it opens lower tomorrow, maybe you take some profits and wait for it to come back up above the T-line. If you're holding long term, I would still just hold long term. Lucid did get back up above the T-line just barely, so it has to open positive tomorrow to stay in it. And Square, that's a nothing chart right now. DS, I probably wouldn't be long or short this one. If it starts trading lower, obviously you could be shorting it. Then click. We just did that one. Oxbridge. Stay long as it stays above the T-line. So observe the obvious, how it kind of just holds the T-line as a support level. Nike, you can stay long on this one, but it better start moving away from the T-line. The slower they move indecisively, the more you definitely want to have a safety stop in place. Horseradish sauce, is that our marketing method? ExxonMobil, I wouldn't be long, and probably the percent return to go short isn't worthwhile. I wouldn't be long or short this one right now. Again, it's an institutional trader. Wynn Resorts, you can short this one if it trades below the 50 tomorrow. And JD.com, there's your bullish flutter kicker type signal. If it opens positive, you could be buying immediately. And Zim, here's kind of your Doji sandwich. Another one you could be buying on positive trading, especially if it breaks out through this level. See, we did Visa, Goog. You can stay long on this one, as long as it stays above the T-line. Now, you usually don't trade this one because it doesn't have big percentage moves unless you're trading option strategies. And Caterpillar, look at the failure, the hanging man right at the 200. Now you watch to see what they do here at the 50. So if you're short, you stay short, but you want to see what happens at the 50. INO, nothing. Wouldn't be long or short. There's just not enough direction to this one. CCI, is that the one you're looking for? That needs to show more strength, or were you looking at Carnival? That one you stay short. Look how it failed right here at the 200. Then notice when they came down to the 50 and the T-line, this is where you observe the obvious. They came right back up, failed at the 50, and headed back down. That's usually a good sign that that's the direction that they're going. Oh, cat. Oh, we're going to have a cat auction again here pretty soon. All you can do here is stay long on Macy's. Nice breakout. Cat. That's just great. 4,800 square feet, and you are right here on the top of my desk. Gold kind of flat. Kitty, you gotta go over here for a little bit. Okay. You don't seem to understand. So gold right now is kind of trading flat. Net. Oh, net, all you can do is stay long. Looks like it's got a J-hook pattern, which I can't fathom that it went from 125 to 217, which means it could go to 310. Can't imagine it, but we don't have to imagine it. You do what the chart tells you. Airbnb needed to trade positive today to stay in it to maintain this uptrend. There you go. Okay. All right, watch to see how the pre-market futures indicate this market's going to open tomorrow. The Dow and the Russell are a little bit squeamish, but the S&P 500 still staying up above the T-line, and the NASDAQ staying up above the T-line. Tells you they're not selling this market off, they're just rotating from sector to sector. There you go, Jay. All right, everybody, thank you for showing up. Oh, I'm supposed to announce that for people that aren't going to go away for Thanksgiving, we might do a Saturday session on how long can this bull market maintain, what are the sectors that are still maintaining. And that'll be for people like me that aren't going anywhere. No, not this Saturday. What is this Saturday? No, it's next Saturday, after the 2 days after Thanksgiving. And then on December 4th, we're going to be doing a mini trading, a mini spotlight session on Saturday on the different elements that can greatly improve your day trading if you're a day trader, which also enhances your entry points for swing trading. How can I scan stocks for specific candlestick patterns? They're already on Metastock. They're already over on TC2000. Those are worth, if you're trading a lot, those are worth just paying for those services. They aren't that expensive. Thinkorswim, we've got formulas over on Thinkorswim. You know, trying to get scannings, aspects off of trading platforms is they're more oriented toward the trading platform, not your scanning. So we've tried to set up scan process for TradeStation and Thinkorswim. They're good, but they're not anywhere close to Metastock or TC2000. And for the price difference, you save a heck of a lot of time using one of those softwares for scanning than trying to use the scanning capabilities of a trading. I thought we had done it for NinjaTrader years ago. I'll have to ask Pat. I'm pretty sure NinjaTrader was one of the first ones we put our formulas over for. Okay, everybody. That's a J-hook type pattern. I'd stay long on Taiwan Semiconductor. Mac, yeah, I don't know what you were referring to, but send an email to Abe and he'll get you in the right direction. TKU, that's not coming up. Okay. Yeah, Jim put a link for scans also. All right, everybody, we'll see you bright and early tomorrow morning in the chat rooms.